Welcome back to Solomon's Insurance Talks. Let's sit. I'm Timothy Solomon. I am the agency owner of Solomon's Insurance Solutions, LLC. And we're coming at you today with another important insurance concept / topic that we all have that's going to let us understand our insurance policies a little more. Again, that's always the goal of these videos, is to help, everybody understand more of their insurance policy. So the two topics we're going to talk to about tonight are renters insurance and homeowners insurance. These are two vastly different concepts. A lot of, they have similarities and differences, but we're going to go through those. So without further ado, let's get started. First, let's talk about, let's start here. There's two different ways an insurance company determines what they pay when a covered peril happen in these topics. And you have something called actual cash value, and you have replacement costs. Now, when you're dealing with actual cash value, it takes into account the depreciation of an object. So if I have a TV that I bought for $1,200, 2 years go by, there's a fire. Because of that fire, I lost my TV. Well, in 2 years, my TV depreciated to, let's say, $500, and that's all the insurance company will write a check for. And then you have something called replacement costs, where the insurance company, seeks out the same exact item, no matter how much it costs, to replace it, for your home, to restore you back to the joy of whatever you were getting from that item. So obviously replacement cost is better than actual cash value, but whether you get a homeowner's insurance policy or a renter's policy, you have to understand or look in the policy to see which way the insurance company is going to be able to determine your loss. Okay, so renter's insurance, let's start there. Renter's insurance offer protection against a covered loss. Common losses that are covered are wind or hail, lightning, fire, or theft. And it's normally only property coverage, for personal belongings. So, for example, there's a fire. Let's say you're living in an apartment complex that has 50 units. One person, starts a fire and it burns down the entire apartment complex or a portion of it, and you just happen to be involved in that fire to no fault of your own. Your renter's insurance will kick in to replace whatever you lost, that just based on your personal property. So if you have $15,000 of personal property in your home, then you would expect, depending on if you have actual cash value or replacement costs, the insurance company to replace whatever you lost due to the covered peril or the covered loss that happened to your own. Now, the another coverage that's built into your renter's insurance that most people don't know about is something called loss of use, or loss of use coverage. Meaning there's another fire, or the same fire, for the sake of the argument, there's the same fire, and you have to move out for a period of 30 days while the apartment complex and while everything gets replaced. So what happens then? Who covers the hotel costs? Who covers any of the additional expenses, that you're suffering due to something that had nothing to do with you, or whether, it was an accident that happened in your apartment? Well, there's something called loss of use coverage. The insurance company will cover the cost of the hotel and any other additional living expense that's been incurred due to the loss, which is very, very, very important. Because it's not just about the loss and getting everything you lost back. It's about the transitional period between the loss, getting everything you lost back, whether it had been a tornado, lightning, fire, theft, any of those things that, cause a loss. There's a transition period between. And the insurance company with the loss of use coverage make sure that they can restore you even in the between time till you get back in your place. Now, the second part of the coverage to your renter's policy is called liability coverage. Liability coverage is for unintended damage to the rental property. So if somebody throws a rock through the window, I think that's the best example we can use. If somebody throws a rock through the window and the landlord wants it replaced or things like that, that's covered under your rental policy, excuse me. And then it's responsible for an accident that occurs in the home. So if somebody's in your place and they slip on something or they fall over on something and they hurt themselves, your rental policy will come in and cover your liability, because these are all about accidents. Nobody goes around playing it on people getting hurt, in their apartment. And, a good portion is, let's say the person falls down and they get hurt in your apartment. They come back and they sue you. The renter's policy could defend you in a lawsuit case. So they'll cover court costs, they'll cover the cost of hiring a lawyer, they'll defend the case for you. And the last part of a rental policy is called medical payments. So again, somebody slips and falls, they break a leg, you poke their eye out by accident, the medical payment portion of the rental policy is going to cover that cost. Now, moving on, let's talk about homeowners. Because if I have a renter's policy, I buy a home, I get a homeowner's policy, what are the main differences? Where are the similarities? And which one should we lean towards? So, homeowners insurance consists of 4 different parts. And the coverages are broken down A through D. So let's get into it. Property coverage A is dwelling, okay? That's coverage to the property itself. So it covers the home and attached structures. So say you're driving through a neighborhood, you have a home, right? And then you have a garage attached to that home. That's all covered under coverage A. The common perils or the common losses that are covered in that homeowner's policy are wind, hail, lightning, fire, and theft. Those are the common things that everybody would experience, and the homeowner's insurance is going to cover it. Coverage B is other structures, detached garages or sheds. So we all been driving through neighborhoods where the garage is detached from the house, or they have sheds or any other things in the back of their property. So coverage B is going to cover other structures on the property that you own. Coverage C, this is where the similarities of the renter's insurance is going to come in. Coverage C is going to be coverage to personal property that you own within the home. So if we go back to the renter's concept, which just covers the property that you own within the home, and we apply everything I said to the homeowner's policy, coverage C is the exact same thing. Coverage D is the coverage of loss of use. So just like in your renter's policy, if something happens, a tornado comes through and tears the neighborhood up, coverage D is going to kick in to make sure that you have a place to stay, or a hotel, or any other temporary living condition or temporary living expenses that were incurred due to the loss. They will be covered under your policy. So if you have to stay in a hotel for a couple weeks while things get back to normal, it's already covered. So that's coverage, A through D. The last piece of the coverage is liability. Same as the renter's policy. You have personal liability. Somebody falls in your home. Let's say, it's snowing and you didn't clean your property off and there's ice there. Somebody's walking by, they slip, they fall, they hurt themselves on your property. You are liable for that accident. So if they sue you because they fell on your property, guess what? Your homeowner's insurance is going to take care of your defense, hiring a lawyer, and things like that. And this is all up to the coverage limits. So it's best to sit down with your independent agent and go over which coverage limits you need. Because if your personal liability coverage limits is $100,000, but somebody slips and falls and the expense goes over $250,000, the insurance company is only responsible for the $100,000 of the portion, and $150,000 of this has to come from you. So you have to sit with your agent and look at your policy and make sure the policy does what you expect it to do. The last part of the policy is medical payments. So same scenario, somebody slips, they break their leg on your property. Your homeowner's insurance will come in and cover the medical payments due to that individual. So liability is always things that did not happen to the owner of the insurance policy. So you can't come out of your house and there's ice and you slip down the steps and you file a homeowner's insurance claim because you got hurt. No. Insurance is for your own personal liability, which means things that are going to happen to other people on your property. So again, I know this video was one of my shorter ones, but now that we understand the difference between renter's insurance and homeowner's insurance, in a very brief way, let's break out those policies, let's call those agents up, and let's make sure we have what we need. And like always, thank you for taking your time out to listen to Solomon's Insurance Talks. Don't forget to like and subscribe. I love making these videos. I love giving out this knowledge. Thank you for your time. And look out for our next video. Our next video, we will be adding sponsors. There's 2 companies that will be sponsoring my next videos. So we will be getting some little ad time and some things I'm going to be saying about these companies that are good. And you're going to learn about these companies and how they will benefit you. So enjoy the rest of your day. God bless. Don't forget to like and subscribe. You all take care.